Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website rickackerman.com. Welcome back to the show, Rick.
Always a pleasure, Jim. Happy New Year, by the way.
Yes, happy. The messages that we keep getting about what's happening with the market, we've had enough of a correction that it's nothing but blue sky ahead, or more stormy times. Rick, what's your reading on it?
Well, there's so many things stacked against a market, a rally in the broad averages to new highs, that you have to be wary that it could actually happen. You know, I'm looking at incipient recession in the U.S. We've got housing and autos in a downturn. Housing, I think, for going into maybe its 10th month on existing home sales, downward spiral. And the same thing that's affected housing has affected the auto business, particularly the leasing sector, where, you know, the whole idea of auto leases is to let us buy more car than we can afford. So, but on the other hand, interest rates have finally peaked. They're coming down pretty hard, and it leads you to wonder whether they'll come down enough or soon enough to essentially prevent cratering in housing and autos. So that's kind of a wild card there. But in any case, I'd just like to track two stocks, Apple and Amazon, because whatever's going to happen to the market will happen to them first and in spades. And looking at Amazon and thinking, is it possible for the stock now to get short squeezed up to a level where it really takes off and fills traders with that idea that maybe it could get to new all-time highs? And once the seed of that thought is there, it's there for the stock market as a whole. And before you know it, a rally that begins as a hoax, as a fraud, as a simple manipulation, takes on a life of its own. It becomes real. And it actually feeds back into the economy and brings the economy back.
I keep hearing on TV that with the declines, it's now too late for people. You have to hold on. Is that true?
It is true. I mean, it's always going to be true. That's how bear markets happen. You know, initially, a pretty good correction isn't going to shake anybody out. But when it gets serious, and I don't think we've even gotten serious with the big drop that's occurred since October. It's a normal correction, a stiff one, but no one panicked. You know, the Dow was up close to 27,000 at its high in early October, and more recently, just in late December, it came down to a low of 21,700. So we had a 6,000 point sell-off. That's serious, but as I said, no one really there was not much fear there, and I think, you know, it's, depending on how you look at it, the market still has to correct more, or could fake everybody out and get to some level where new highs become possible, or conceivable, I should say.
So is it enough of a correction then to allow expansion once more?
That's an interesting question, because it was enough of a correction that it started working in concert with the economic trends that were supposedly foreseen, which made it happen. But you know, as I just mentioned, we could get enough of a rally that it could start impacting the way people think about the economy. If it comes in conjunction with a further decrease in long-term rates and also maybe even a trade deal with China, then there's no question in my mind that the Dow could pop 1,000 points from where it is trading right now to around 25,000. At 25,000, anyone who looks at a chart can absolutely see the possibility, the potential of a rally above that old high at 20, let's call it 27,000. So there's kind of a feedback loop there, and in some ways the economy initially affects the markets, and then the markets, I guess I'll use the word actualize that, but we could be in a situation where the markets could affect the economy.
President Trump said talks with China are going well. Should we take anything from that?
Well, he said that on the final trading day of the year. I think the last time he used those words, they're going well. And that was just, he was doing his bit to help short squeeze stocks up, to get stocks to close on an end of the year rally. But the news media are doing their job as cheerleaders as well. You know, Wall Street Journal will give us, let's say, positive vibrations on the negotiations, although at this point in the news stories, they're still qualifying it. They're saying that the two sides have budged, but they're still far apart. So, if you read a little bit between the lines there, you would, I think, tend to believe that we're going to get an agreement somewhere down the road, and that is certainly good for a 1,000-point rally in a Dow.
But some have suggested China needs the U.S. a whole lot more than the U.S. needs China. Is that adding fuel to the talks?
I think you can debate that point, really. You come at the argument from either side. I'm not quite sure they need us more than we need them, but for sure the trade embargoes, the tariffs that Trump has slapped on Chinese goods, has hurt a Chinese economy that was already, I won't say tottering, but it was weakening somewhat. So at this point, yeah, the Chinese could certainly use some relief because they have a different kind of deflationary juggernaut than the one faced by the West. A lot of it has to do with speculation in real estate, but I think right now they need us a little more than we need them.
We'll have more with Rick Ackerman right after the break.
Ackerman Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Ackerman's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at ackermanresources.com.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Rick Ackerman. Rick, any thoughts on what's happening with crude right now? Are prices as low as they're going to go?
We had a huge, precipitous move in crude. You know, in early October, when the stock market started to slide, barrel of oil was trading as high NYMEX, when the NYMEX as high as $76, and not just by the end of December, it come down to a low of $42. Now that's a huge move, and I don't think that it's just a coincidence that oil and stocks have moved down and moved up almost synchronously. The reason is that the banksters perceive the price of crude as very important to the global financial picture and to the, I'm going to use the word health in quotes. But coming out of the housing crash of 2007 and 8, the banksters looked around and thought, well, what can we get hocked up to our eyeballs in? And since housing was not the answer then, they needed some other form of collateral. they bet big on the energy sector. So the price slide that we saw from 76 a barrel down to mid 40s was hugely deflationary. You know, all the loans written on oil collateral were becoming increasingly shaky. So crude has come off the low for who knows what reason. You know, we've talked about every day the Wall Street Journal and the other news media cheerlead the Saudi tightening of supplies, but I'm always going to be skeptical that you can drive a bull market in a commodity by tightening supplies. I think that true bull markets come from the demand side, so I'm a little distrustful of the rally in crude, but just the same, you have to give it the benefit of the doubt for now. If the February contract, currently trading for $52, goes to 55, I would say that this crude oil rally is getting legs, and that a further move up would be synchronous and supportive of synchronous with and supportive of a further rally in U.S. stocks.
The U.S. dollar, what's it going to do, or what has it done?
Well, my long-range forecast for the dollar is hugely bullish. The dollar index, currently trading around 95, I see going to around 120 to test highs that were made at the beginning of the millennium, the new millennium. But it's been in a pretty good correction. Since mid-December, the dollar index has come down from around 97.71, currently trading down on a day 95.35. It would have to break 93.19 to start looking worrisome on the daily chart. So I see the sell-off that's occurred in the dollar since mid-December as being just an ordinary correction.
The Canadian dollar has had a boost. Is that because Canada's finally getting a decent price for its domestically produced oil, the heavy oil from Alberta?
Yeah, for sure. It's just as stocks move higher, the Canadian dollar breathes a sigh of relief when resource prices, particularly energy and timber, are going higher. So as long as crude heads higher, the loonie will do just fine. It's coming off a late December low there of 73 U.S. cents, currently trading close to 76 cents. It's actually been up there today, so it's a pretty strong rally, and it matches the one in oil.
Now, Canadians, of course, always compare our currency to the U.S. currency, but how is Canada doing compared to the rest of the world?
I think partly through natural design. You know, it doesn't have the problems of population density of the U.S. and certainly many other first world economic powers. Also, I think Canada has developed its resources at a sustainable pace. They seem to be somewhat conservative in their financial orientation. They've never gotten aboard. Well, actually, I'm saying aboard for all the leveraging that's happened in the financial sector. But I'm thinking back to there was a Canadian guy named C.V. Myers who wrote a great newsletter years ago, Myers Finance and Energy, and he was on top of the collapse of one of Canada's largest banks, the imminent collapse of that bank, and so I think possibly the Canadians have learned their lessons. So it seems like, to me, a steadier bet than the U.S., less volatility.
We'll have more with Rick Ackerman right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, are junior miners a good bargain to look at right now?
I've been out to see a few of them, and when you have to visit them to appreciate how labor, energy, and capital intensive it is to get an ounce of gold out of the ground. You know, I went to some properties owned by Rye Patch, and they had 150 tractors and machines working, and a pretty big workforce, and they were heap leaching some enormous hillsides. And at the end of a week period, they would do a pour, and they would come out with, 70-80% pure gold, no more than you could hold, you could carry. So these junior miners, as much as they've been shaken out, I think they're marginal survivors at this point. We're going to need to see a further increase in the price of gold before some of them come to life. But if they do, and I think that the rally in gold is real. I've been skeptical, at least to the point of not wanting to jump in on strong rallies. I've tended to recommend buying in gold only when it's been weak. But I would say that the rally that's occurred since around mid-November, good leg that took the price of an ounce from around 1207 to a current 1290. It's on a sustainable pitch, and each new stab higher has taken it past a previous peak that was made on the way down last summer and spring. So I like the rally, and I'm cautiously optimistic, but I think we're going to need to see gold go well above 1300, 1350, 1380 before some of these junior miners spring back to life.
Cryptocurrencies, the darling of, I guess, nouveau investors a couple of years ago, are they going to stick around?
I don't think so. I think that the blockchain will be very useful in a number of areas, but someone I speak with regularly had a very interesting take on the cryptos, and that is that they are not so algorithmically secure and impregnable as we might want to imagine. That in fact they're very vulnerable to hacks, and we've seen that at some levels, mainly by crypto banks that didn't safeguard their inventory in a proper way. But it's possible that the cryptos will have to be shaken out and reborn in some other form of currency. But I have been bearish on them and have been predicting. Actually, I took the cryptos off my front page because they were just really starting to get pretty boring. But I had a target down around 2,600 in one particular vehicle that has a symbol BRTI. It's a real-time index that aggregates the best offers and the best bids, and currently trading close to $4,000 off a high. I might remind you of 19,601 back in December of 2017. But I don't see any sign of rebirth in the cryptos.
They did suck a lot of money out of the market, and people were saying, are you sure you can get anything back? Were they right to say that?
Well, the reason the bear market happened in cryptos, it had an enormous spike up, from 2017 in autumn and September, trading around 3,000, and it had its big move up to close to 20,000 in the ensuing months before 2018. So the big rally happened around 6 months. And as it began to come down, there were a lot of concerns. People had bought crypto from 37 cents. A lot of people were in so early and so cheap that the initial phase of the bear market didn't much hurt. But I think that there was a lot of buying in cryptos on the way down, and you started having real losses, and then you finally reached the point where people were in it so cheap and weren't even paying much attention. They were counting their chickens, were starting to get hurt themselves. So that's what happened in crypto. The bear market mutated from one where all the players, they were all insiders, even the ones the geeks who bought it for practically nothing years ago. So it mutated from like, who cares? I've got so much profit in this thing, to, hey, geez, I've got an actual dollar loss. So that's where we are now. The cryptos are saddled with real inventory holders who have real dollar losses.
What about the people who hope that they would become the new currencies of the world, when it turns out to make a transaction it costs you $30-40 to make one? Who wants to use a dollar that costs you an arm and a leg to use?
Yeah, and that seemed pretty obvious all along. Cryptos were going to be the answer for very small change transactions. Your figure, I've never heard that one before, about, what was it, $30-some?
Yeah.
Every transaction. I was thinking that cryptos became not viable anymore for small transactions when the cost went above something like, 40 cents or something like that. So you're so far out of that range. And, I'm not even sure. It's possible your dollar figure takes into account even the energy costs that are expended in the creation of Bitcoin currency. To do it, you need to essentially solve the blockchain, to extend the blockchain, and your reward comes in the form of cryptocurrency. But since there might be 1,000 maniacs working at that same project, all using enormous computer processing power, it requires enormous amounts of energy, of whole server farms, just to deliver a crypto solution that extends the blockchain. So yeah, cryptos, as far as cryptos didn't even come close to supplanting or superseding credit cards as a way of doing small transactions.
And we also had some counties in the U.S. saying that the mining of cryptos was causing strain to the power grid, and one of China's excuses for cracking down on cryptos was also it was sucking up so much power that was needed by industry.
Yeah, that's true. And to come back to the mining example, when you go to a mine site and you see what really goes into how much enormous effort, capital, energy, manpower goes into extracting a single ounce of gold from the ground, to have referred to Bitcoin creators as miners that was so pretentious. It was so ridiculous. These were guys who just simply plugged in computers and they sat back while the computers worked away at it. And it takes you back to the alchemists, really, where there is this captivating idea that we can all get rich just sort of sitting back and having some machine do all the work for us.
Rick, thank you so much for chatting with us.
Well, thanks for inviting me on, Jim. It is always a pleasure.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet, our YouTube channel, Talk Digital Network. If you have any questions for Rick or any of our other guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.